This week we are coming out with two interesting webinars. The first webinar is why goal mapping beats chasing return. Here we discuss on the power of goal-based investing. And the second webinar is India versus the world, where to allocate the capital. Here we discuss on our multi-asset PMS product Spear. To join this webinar, click the link below.
Friends, in this video, I'm going to talk to you on the topic, are we obsessing too much over individual stocks? Most of the people I met always want to know what to do about new ideas, which stock to buy next, which stock is overvalued, which stock is undervalued, which company is a good company, which company is a bad company, which company is a mediocre company, which company is transforming. So it's a company level obsession, an idea level obsession that I see all the time. But rarely have I seen people discuss their portfolios. What kind of a portfolio are they building? What is the risk management that they're doing in the portfolio? Is their portfolio geared up to meet the future scenario, or is it still trapped in the past? Have they created a pipeline of new ideas which will make their portfolios fresh? How do they always keep their portfolio relevant to the current economic setting? How do they purpose their portfolio towards the future? Rarely do we find discussions of this type. I was expecting that with the explosion of social media, this would again come into the center stage of investment discussions, but it has not happened. In fact, the proliferation of social media has only created more conversations at the company level and less conversations at the portfolio level. You may flip this and argue that if I get my good stocks, why worry about the portfolio? It doesn't work that way. You have to have a portfolio strategy, and your stocks should fit that strategy. If you have no portfolio strategy and only stock strategies, you will effectively not have a risk management strategy in place. That's the risk. And secondly, you will not have a process of running an effective portfolio. You will not process your ideas properly. You will randomly process your ideas, and you will buy them very randomly and with no pattern. And your portfolio will also be random with no pattern. When you have a portfolio that's random with no pattern, you run the risk of that portfolio running up too much risk. Spiking risks and taking you to a difficult place. This is something which investors don't respect enough. I've been seeing this all along and it's not changed much. We are a society obsessed about stocks. We think that getting to know the right names is going to create wealth for us. We don't look beyond the names. Once we hear the name, we want to act on that name. We give less respect for valuation when we are running behind names, and we tend to lose money even in good companies. Now, this is one aspect which people don't realize. If you had bought a company which is undervalued and you are going to buy the same company today at 3 times the cost that you bought, and that company is a compounder with some 10% or 12% growth and 14-15% income growth, you may well be overpaying today. But people think that it's triple, so it must be good to buy anytime. This kind of applying recency bias to validate preconceived decisions is what creates investment failure even in good companies. A lot of people have lost money in tech companies, in the best of tech companies, in the market leaders. Even buybacks are not going to help them recoup capital so easily. It's going to be a long wait. Why did this happen? It happened principally because people are not respecting valuations enough. And why are they not respecting valuations enough? Because they just want to over-obsess on stocks and under-emphasize the importance of portfolio construction. Process is secondary to them. This is a time when you should invert this and make process the primary driver, portfolio construction your focus, and then see what are your stocks, what you should own, what you should sell, and what you should just allow to run. This is a time for you to change tack and move beyond stocks and start thinking at the portfolio level. Thank you for watching this video.